Due to the mandated government lockdowns, many small businesses have sustained massive drops in revenue or even been forced to close their doors. The U.S. Chamber of Commerce estimates that 1 in 4 small businesses report having already temporarily shut down. Now, 43% of small businesses believe that they have less than 6 months until a permanent shutdown is unavoidable. It's well documented and covered by mainstream media that many small businesses have applied for, but were unable to obtain government assistance during the forced shutdowns. Now, as a result, many small businesses are turning to their insurance carriers and filing claims related to the coronavirus shutdowns. Now, it's no big surprise that the insurance companies are denying many of these claims, and this is leading to various lawsuits for business interruption and civil authority coverage across the country. Now, the insurance industry claims that if it's forced to pay these claims, that they may face insolvency. Some lawmakers are exploring state and federal statutes to try to extend coverage for pandemics to small businesses. Now, however we look at it, it sure seems like small business is taking a major hit here, and that the lawsuits against their insurance carriers may just be Hail Marys. In light of this being COVID-19 litigation, Clay came up with the fitting name of COVIDigation. Now, I'm Ali from That's What the F Happens. Let's see what's happening with COVIDigation.
No man steps in the same river twice.
Trust but verify.
Never let it go across the total race.
Knowledge, wisdom, and understanding.
That's what the F happens.
So we are back, number 7. That's What the F Happens, episode number 7. And this one is going to be really about the COVID small business litigation. Rahim actually was the one that brought this to my attention. And I definitely wanted to get him involved in this because he's got, maybe Rahim, you could even tell him a little bit about your background in insurance defense.
Yeah, so for the last 3 years, I've been representing insurance companies in mostly property damage litigation, but a big part of that is like coverage issues, determining whether or not, the insurance company is gonna provide coverage at all. That is the big deal right now in this in the COVID-19 litigation. There's a couple things we're gonna get into, but
So you're Rahim. You're basically the one rejecting everyone's claims right now.
Oh yeah, I mean that's what I do, man. That's what I do.
Denied.
No.
It's just a step.
What I actually do is work with plaintiffs' counsel, because what I realized not so long ago is that the insurance company pays everybody. So I got to work with them. I got to work with the insured. And then we can all get paid. That's what I really do. But I do see it from the side of I know why claims get denied. And one big thing I see is claims get denied incorrectly. I see the times where the fight is worth it. What you're gonna hear from the other side, from the plaintiff's counsel, from the insured, whether it's the small business owner, whether it's the big business owner, or whether it's just somebody who's trying to get the Hurricane Irma claim paid. You're gonna hear that, this is a racket. They just collect my money and they never had any intent on paying me. So I see what actually happens with all of that. So
I gotta say, from someone that's not a lawyer, not in the insurance industry, my perspective is a simple client or customer in this equation. My experience is I generally do not have faith in insurance companies to deliver when you need them most. So that sentiment of the racket or the scam is that I've expressed that in the past in those exact words.
Right. And I've seen it. I've been there. I've taken, 80-year-old couple's deposition, and they're telling me, I read the claim file, I go through everything, and I'm thinking like, oh man, they made this up. Like this didn't really happen. And then I get in the room with them, and they start telling me about everything that happened and how it happened and how they, still got a hole in their roof. The realities of it, of being on, having to enforce the policy against somebody when you really need them. That's when they really need you, regardless of what the policy says. So I've been on both sides of that. And I think going to what we're going to get into today, obviously right now, man, this COVID litigation, it's a lot, it hasn't been a big part of the news cycle, but if you go, as you see with all the articles Ali sent out, if you start doing some research, man, it's about to boom. It's about to be big. And, it's easy to think that it's billionaire companies against millionaire restaurants or millionaire, theaters. But if you look at, some of the complaints we read, and we're talking about companies that have, tens of thousands of dollars margin every month. These people aren't getting rich. These people are, they're paying their kids tuition, but they're not getting rich. They're not buying boats. So, it's not that billionaire versus millionaire kind of thing that we hear about all the time. So,
I think the one thing we have to rewind for a moment and give some background in terms of because some of what we're discussing already, we're getting into specifics without really describing how this conversation, what we're about to embark on, came to be, and so
right.
What's taking place that we're observing that led to the conversation we're having right now.
Shutdown order is hitting San Diego retailers and restaurants more than anticipated. Their insurance policies likely won't cover their losses.
All right, so basically what's happened now is businesses have these policies where they insure against certain types of risks, and essentially one of the risks that that the policies are supposed to cover is what's known as business interruption.
Two things. There's two ways that business interruption or your business income can be insured. You can insure your property, and if your property sustains damage, and part of the damage is that you can't operate your company, you can receive payment for that business income that you didn't make because of the damage to your property. And so we'll talk about the
future loss of revenues and things of that nature
related to the damage to your property. You can also directly insure business income, where it's that you're not insuring your company, you're insuring your revenues. So if certain events happen where you were no longer getting your revenues, for instance, like we'll get into this a little bit more, but the difference between a pandemic causing it or a government shutdown causing it,
that's why we're discussing this at all right now. Is the business interruption in question at this moment is the coronavirus and the repercussions of that, specifically government.
The essential versus non-essential, the restaurants that used to have folks come in, now they only can do takeout, if they can even only do that. And from my understanding, just restaurant industry in general, is that the margins aren't that big, but they still got rent to pay. They've been forced to lay people off. They've been forced to furlough people. They want to be able to bring people back. And they may have thought that they were covered for this type of risk.
And just for the record, this is small. This is all types of small business. Think about all the small businesses you frequent that you're not frequenting at this moment. For example, I know the barber I go to, they're shut down. So that's not a restaurant, but they're suffering from this. You have cafes, you have the sort
How
of
about anything in a mall? Anything in a mall.
State.
Yep.
Governor Phil Murphy is asking for help from the U.S. military and has ordered all indoor shopping malls shut down. CBS.
So we have the pandemic, we have coronavirus, we have the government shutting down all businesses that are not considered essential. Now, how does the business interruption insurance, COVID litigation factor into this? And by the way, I think from here on going forward, let's just call it COVIDigation, man.
Well, I'll jump in. I think one of the main things that that's basically happened is that the insurance company either one have just denied it. They're saying, no, we're not paying you any money. When people have made claims, they've denied it.
It's the insurance companies that are simply going deaf ears and saying no, no, no.
Been a couple of instances where even before they denied it, they were like, hey, before you make a claim, I'm just gonna let you know we're not paying this.
the preemptive,
So, yeah,
is that called like preemptive denial or something? Is there some
no, it's when you breach a contract when you know you're gonna breach it. I can't
Anticipatory
think of the name,
breach?
but
Anticipatory breach?
Yep, that's what it is.
from the literature that we've all shared amongst one another, what stood out to me, and I think Ali has a pretty good sense of this, but it just really stood out to me that they're saying that, you know, if you read the fine print, you read the details, it's like, well, someone would have had to have had coronavirus on your premises, and now the entire business is infected and you're unable to enter, and due to that, your business has been interrupted. But
Right. Right.
Pandemic,
It's that physical damage aspect that I was noticing, or damage to property or suffers physical damage aspect of that business interruption. But I guess that must go towards the business interruption, towards the property. And I'm assuming that these people who are suing didn't have like the revenue actually insured.
You can also have endorsements that insure your company. And ensure your profits, and
but it seems to me that they're not quibbling over whether it's damage to the business or damage to revenues. It seems to me the loophole they're finding is it doesn't matter whether it's damage to your business or to your revenue or whatever your issue is. They're going to deny it on the grounds that your business is not shuttered because of some infection that took place on there. You're still able to access it. It's just there aren't any customers coming in, and that's something that's beyond the scope of the contract and agreement, correct?
One of the issues that have been raised, and this is going to be the fight. This is going to be the fight that we're going to see, is whether or not, because there's an exclusion for viruses, for pandemics. What happened was when during the SARS outbreak, all the insurers said, no, if it's this, we're going to exclude this. We're not paying for this, right? So the issue is, what caused why aren't people coming in? Is it because of the virus, or is it because of a governmental action? And so the insurance company is saying that
the governmental
action directly relates,
right? And that's
to the virus.
But then that leads to the civil authority claims, right? I mean, there is some ground there, right?
Well, so the civil authority has to do with taking, really.
Say that again.
Right, and I was going to say the civil authority, from what I looked at, it was basically saying that some sort of civil authority had to prohibit your access to the premises, saying like you couldn't make it onto the premises. Like, for example, a hurricane hit the whole thing, everything got blown up, and they just blocked the whole thing out, or they evacuated everyone. Now,
so
the business owner is not prohibited from going to the premises.
Right. So there's
they just can't conduct business there.
Right. So it's like, hey, you have access to your business and you can get in there. It's just customers can't. So
right.
So it sucks to be you.
I think from like, even from the attorney perspective, non-attorney perspective, is that, man, this thing is wide open. Like, this is not. I do a little bit of coverage work. I don't think Ali, I don't think you do that much in that realm. But even from the attorney perspective, just kind of understanding how it goes. Man, this thing is wide open, and like the thing is
Wide open in what sense? Could you clarify that? I'm sorry to interrupt.
Oh yeah. I mean, so we're talking about even just the argument the point of view we were just talking about. Whereas, all right, the civil authority says, all right, they didn't say you can't go into your business, but they said nobody can come, or nobody can sit down, and you can get takeout, or everybody has to wear a mask, or and to determine what, like legally, what does that mean, or contractually, how do these actions fit into the contract that you have, and even further, what a lot of people, small businesses, they don't even know the contracts that they have.
My sentiment all along is like, hey, my instinct wasn't, hey, let's the insurer should bear the brunt of that. That wasn't even where my thinking went. I felt all along the government shut down businesses. The government needs to bear the responsibility. They're the ones.
They're the cause of. I mean, they're not the cause of the virus, but they're the cause of people's businesses going under. Now, I wanted to get into like these lawsuits a little bit. From what I saw, there was a couple types of lawsuits that. Well, first of all, there's obviously there's those deck actions, and then there's the breach of contracts. Basically, so Rahim, maybe can you describe the difference between what a deck action is and what a breach of contract claim is, as far as these insurance claims go?
Right. So I'll start with the breach of contract. Breach of contract is your run-of-the-mill lawsuit. You're saying that you entered into an agreement with somebody. They didn't hold up their end of the agreement. In these cases, is that you paid your premium. You guys, you had an insurance contract. An event that triggers payment under the contract occurred, and the insurance company said, "No, I'm not paying you." So that, and then you're asking for money. So that's what you normally see. However, most of these in the COVIDigation, most of these have been.
No, I just said I like it.
Yeah.
We patented that shit. We put a trademark on that.
COVIDigation.
Right. Yep, we gotta throw it on there. Most of these have been deck actions. I mean, that's just and to not use the lawyer lingo, is action for declaratory judgment. I mean, you just don't out if you're not in the everyday world, you're just not gonna hear about these. But basically, what you're asking to do, what you're asking the court to do, is say that the policy does cover it, and then you're gonna go back and ask for the money later. This is not even a request for money. You're just asking the court to say, usually the policy does cover this thing. For instance,
it's like a determination of coverage, kind of.
A determination of coverage, exactly. You're asking the court to say that, like for instance, in I think the most interesting case, that COVID-19 is a mutation of SARS, SARS. I didn't even know SARS was COVID, but
right. Oh, that was the one that they were talking about, the one from the Southern District of Texas. I found that very interesting. You were talking about the one where they had the endorsement for the pandemic event, and expressly said that it was supposed to cover severe acute respiratory syndrome associated with coronavirus disease and its mutations and variants, but still they denied the coverage.
So to explain that, I mean, in short, they had what happened was when the SARS outbreak happened, all the insurers said, whether it's property, business interruption, whoever it was applicable to, they said, you know what, we're not covering viruses. We're out that game. So they all put exclusions in there, and then Lloyd's of London, one of the biggest insurers in the world, they said, all right, well, everybody's out that game. We're in that game.
So let me just ask you this. It was an endorsement. Usually what I understand an endorsement to mean, and I could be wrong, was that it's not really usually included in your contract, but you paid extra for it to be included. Is that what an endorsement is? So someone paid extra for this coverage.
Right. It changed the policy, and technically an endorsement changes the policy. So and yet non-technically they go ahead.
I'm just to try to clarify. So you're saying that they got the endorsement to specifically address viruses, and the insurance companies are still rejecting claims that involve policies with this endorsement. Is that what's happening?
Well, in fact, in this particular case, it said that the insurer denied coverage because it concluded that COVID-19 is not a mutation or variant of SARS-CoV disease.
Right. So, yeah. So, I mean,
it goes against everything I've heard this whole time.
Well, one thing that occurs to me is that it seems like, again, there's going to be a delay in hearing these sorts of cases, right? I mean, how are the courts operating right now?
Well, this goes back to what I asked Rahim, because, all right, so usually when I see these insurance cases, they're in what's known as just like state court, but all of these cases that we've been seeing are in federal court. And I asked Rahim why he thought that was, and I asked him if he thought it was because in federal court, they have like these mandatory scheduling. So the cases move along a lot quicker than in state court. So, I mean, maybe Rahim, you could elaborate on the timetable.
Well, I think, well, for one, the courts are, just as a practical matter, just like everything else, the courts are moving slow.
I'm having that challenge with the child support, with the New York Family Court. It's like, you can't schedule a hearing. It's crazy.
Right, exactly. And a lot of these things, they involve rights that a lot of the judges don't feel comfortable with dealing. They don't feel comfortable with dealing with over a Zoom or over the phone.
Yeah, I don't know what they're going to do, because evidentiary hearings really need to be in person to be able to judge the person's credibility or not.
Right. Because the courts are so clogged, you can't get any hearings, you can't get anything done. They're taking these things to federal court. Federal court is like it's a chopping block. Like you got to follow. The judge is saying do everything this date. They come out with an order. Everything has to be done by these dates. And things move along, and people are kind of going that way.
And not to mention the hearings are much less in federal court as well. It's kind of like motion, response, response and opposition, and then an order. So it's like a lot of writing as opposed to showing up in person and arguing.
Yeah, and I think one of the other things, probably one of the telling things about this, in order to get to federal court, you got to have $75,000 on the line. I mean, that's not a whole lot, but a lot of times in insurance matters, they can fall less than that, and you got to be dealing with somebody who's not a company that's not based in your state. And these plaintiff attorneys, they got this thing down pat. They file these lawsuits in state court and they just roll. And they have to find a different way, and they don't do that. They want to be able to just chill and then all of a sudden just say, hey, can you give me $100,000? But the thing about litigation is that it doesn't just affect the parties to the lawsuit. It's gonna affect the way the insurance company does business going forward. It's going to affect the way the premiums. It's going to affect, once they get a denial, it's going to affect the way that their lawyers sue the insurance company. And if we ever get an appellate decision, then that's going to be the law. And then it's going to, who knows? And I'm sure there's going to be one coming down. It's going to be a few years, but then it's going to be the law. Like, oh yeah, COVID-19, it wasn't a direct virus thing. It was the civil authority, or it wasn't. The effect is going to spiral. We're going to see it for years to come.
Well, one thing that sounds to me though is, again, it goes back to, someone is going to have to hold out long enough and pursue this long enough if it were ever to become, as you said, reach the appellate courts to effectively establish some sort of law. Someone would really have to be persistent about this and want to fight to the bloody end. But I think that's a good segue into the discussion about the legislative approach. Can legislators determine what they'd like to do is force insurers to cover certain things? And just, I mean, you all can offer your legal perspective, but I do know from my experience working in the legislature, what happens is usually you'll have a legislator hearing from constituents and hearing about something terrible like this, and their knee-jerk reaction. The PRS, are one of our favorite little phrases, problem, reaction, solution, is to run and draft up some legislation and say, well, we've got to do something. We need to mandate this. We need to, in this case, force insurance. Usually bills like that are dead on arrival. You have lots of lawyers working in the legislative arm, and what I've witnessed time and time again is they refer these types of proposals, these bills, to the judiciary committees in both chambers, House and the Senate, and they just dissect the hell out of that. You'll always have a few lawyers, if not numerous lawyers, on those committees, and these people dive into the minutia. They read every potential pitfall, and those types of bills rarely make it out of the judiciary committee, just due to or if they do, what happens is sometimes because of the makeup of the committee, the bill will pass heavily amended, make it to the floor where it'll get killed. They let it pass just to support the legislator that had drafted the bill and was pushing it, but then they never see the light of day. They're pretty much dead on arrival. So I don't see that being any different here, and that's me from my life in working in the legislature. But y'all can probably shed some light.
So what I want to just jump in on is that there's two levels of this legislation. Now, there's legislation that's going on the state level. We've got New York, New Jersey, Louisiana, Massachusetts, Ohio, and Pennsylvania have introduced bills that would provide coverage where for this COVID thing that would normally not be covered. But then you have actually Congress trying to bring forward something known as the Pandemic Risk Insurance Act, which they were saying would be similar to the Terrorism Risk Insurance Act, where basically the government would insure, or they would only. I think the way I understood it was that the insurers would pay up until a certain amount, and then after that, the government would kick in. But it's important to know that there's bills being offered by Congress, and then there's these bills being offered by the state, which essentially would be changing the contracts, and that is not okay. It's called like an ex post facto changing of the contract, and that's unconstitutional. They can't just go back and change these contracts.
That was really my I don't know a whole lot about the legislature, outside of basically what we learned in law school and what you learn in elementary school and civics class.
Right.
But I do remember that the one thing I remember is that you cannot. It's at least unconstitutional in the state, under the Florida state constitution, to pass a law that after the fact changes a contract that's in place. You can't do that.
Right.
And that's why most of this legislature will be dead on arrival. There is enough there that it's a house of cards that'll fall apart quickly. But I think there is something there at the federal level that does make sense in a way. This goes back to what I was saying. The federal government is partially responsible for the situation we're in. And I'm not saying I blame them, but they are responsible. I think there's a distinction there, correct?
Right.
And it's like we have the FDIC, I forget what the initials stand for, the Federal Deposit Insurers Company or for whatever, and they
Right.
insure banks. It's the same concept, is that at some level you need a level of insurance that only your massive federal government can provide, and I believe that's probably the same application with the terrorist policy that you were describing previously. And that seems like a viable option, and it sort of speaks to what I was saying, where it's like, hey, the federal government has to come in and they have to carry the torch from here on, because that, if not, what is your federal government for? These things go, to a certain extent, they go beyond insurers in a way, and they have the means also. I mean, you know, to a certain extent, they are insuring us at the current moment. It's just a debate of to what extent they're doing that effectively. And as you already remarked earlier, that pittance we all received is, you know, that's the level of coverage we have, right?
Right. You don't even get 1 month's rent, you know, like.
I think one of the things to look at is that the insurance companies are kind of in a too big to fail situation, because, like,
that's right.
What are you gonna do? You know, and I'll give you a quick, like, kind of analogy. I believe, and I wish I had looked this up before, but I believe Citizens and Citizens is the property insurance company, is the state organized, not state run. It's like a quasi government insurance company, right?
With a little background on
basically
Citizens, they had to create it because of all the hurricanes in Florida. Other insurers wouldn't insure property, so like the state of Florida had to create its own property insurance company.
That was like Wilma, Rita, Katrina, right?
Right.
So basically, so this is, I think it's a similar kind of thing. It's like they had no way out of it. They denied. I'm sure they denied. I was just graduating from college when it happened, when the hurricanes happened, and I was in law school while they were litigating these claims. But I worked for Citizens representing Citizens for a long time, and like what happened was that all these companies had to pay out all these claims, and they were like, you know what? We're not giving people on the coast insurance anymore. And, you know, and basically the state said, as opposed to bailing them out, they said, I mean, a similar too big to fail.
Let's just make this our business, they said.
That's the only thing they could do, because
otherwise people were not going to be able to have coverage.
Right.
And the mortgages required coverage. So therefore people wouldn't be able to have homes.
Well, and that, yeah, exactly. The dominoes start falling, right? It's like, well, why the hell am I going to move to Florida if the hurricane happens? I can't insure my home. There's no protection.
Well, you can't even get a mortgage on it, because like the mortgages require insurance, because, you know, I guess technically the deed is in your name, but they have a lien against your property, so they're not going to insure it they're not going to give you the loan for hundreds of thousands of dollars if that property isn't insured against whatever risk they want. So that people wouldn't be able to buy properties with mortgages.
It was over.
It would have been
the whole Florida thing. Could move to Florida, buy a nice crib on the water. It was over with unless they stepped in. Like, it was literally going to be over with. The whole Florida lifestyle.
But the irony also is that there are people that would make the argument that that's what needs to happen anyways, is people need to stop buying housing close to the coast. You know, there are people that would make the case for that. So it's interesting that's, you know, some people are like, it's pretty obvious what you should do here. You shouldn't be buying houses in Florida because the chances of getting wiped out are pretty good. There are people that say that, and maybe there's some merit to that. Who knows? But that is an existing sentiment.
Right. Yes. And what I also wanted to bring up as too big to fail was something that I thought was very interesting in one of the articles that I sent around, I think a little later though, it was the impact on the stock market. Because as it turns out, these huge insurance carriers are heavily invested in the US stock market. So what they're saying is like, so I'll just read it here. It says many U.S. insurance are also sizable investors in the U.S. stock market, such as Berkshire Hathaway. According to CNBC, the insurer, as of April 6, 2020, had a stock portfolio worth about $166 billion. And then they're saying here, if the insurers have to have a fire sale because they're going under, because they have to pay all these claims, it's going to have a complete blowback on the entire market. So like the entire market is at risk if they have to pay out all these claims.
That's insane, because that just reeks highly of, I believe it was the 2008 collapse. We are seeing so many small businesses either that will fail or reach the brink of failure in the next few months. And I think a big takeaway for people is, I don't ever want to open a small business again. I don't want to take that risk. I don't want to be the entrepreneur like I thought I did, because holy shit, everything I work for could just be ripped out from under me by the most unexpected of causes. So I think that there will be a fear, an atmosphere of fear in the entrepreneurial world, in the small business world, that I think.
So then what you're saying is that we're going to be left with only corporations, massive corporations.
And
which, I mean, I've said that I thought that might have been part of the goal from the beginning. We've had this conversation.
Less competition. You know,
competition is a sin.
Well,
they're now effectively eliminating competition.
Again, I highlighted at the beginning of this, and it's come up in our previous conversations, that a company like Amazon, the big boxes, they haven't batted an eye. They're getting more business. Well, I'm ordering more crap from Amazon because where the hell else can I get stuff from? So there's that. But, you know, big business does have one competitor. And for example, if you're factoring us, we are commodities ourselves as workers, right? And
well, also we are commodities based on our data. Like big business collects our data and then sells it through back and forth.
But going forward, if you're not willing to take that risk to be an entrepreneur, there are fewer small businesses for you to work at. Where do you turn to? Where am I going to work? You got to work somewhere. You got to have some source of income. It's either big businesses or big government. And so people, rather than be risk takers, follow their dreams to own a cafe, a restaurant, or whatever, I guess I'm going to take that entry-level gig with, the
Amazon,
my local finance department. Or I guess I'm going to be, I'm not going to be working as a barista. I'm going to go work as a package dude in a warehouse.
Or you work as a barista at Starbucks.
Yeah, yes, but it ain't your love.
Which will be the only coffee shop left after all this.
But
nah, I mean, I don't know, man. But a lot of these guys got it out from these guys came up from the bottom, man. Bezos, he came up with that. He decided to take his bread and start a book company that was online when like that was like a ridiculous idea. Like, I don't know. People are gonna get out there and get it.
Is small business may just take a different form. It may no longer be brick and mortar. It may be everything has to be online. Because like the one thing that I've learned, or I've been trying to learn as my lesson from this, is that I need to be doing something that I can do from home with low overhead. Yeah. And the only reason why my firm is even still in existence is because it's low overhead. I kept the overhead as low as possible, and I'm trying to do everything from home now.
I feel like that's a perfect segue. I think we can almost end there, because what you're hinging on now is what should be our next topic, and it's if we're doing everything from home, and we're not making contact with people, how the hell are we getting paid? And that we've already hinted at the cashless society, how we exchange in this and what becomes of cash in the society we're in now. So I think that might be a perfect place to leave it if you're comfortable with that. And that, I mean,
yeah. Well, hey, thank you everybody for tuning in to episode 7 of That's What the F Happens. Any last thoughts from either of y'all? COVIDigation.
COVIDigation, baby.
Same.
I'm looking forward to some talk about cashless society. See y'all next time.
Cashless society, let's get it.
See y'all next time on That's What the F.
See y'all next time.